Happy weekend, everyone. Welcome to CTI Market View. We'll be studying the price action on Nifty, Bank Nifty, and review what happened in the global charts last week. In commodity session, we will also cover gold and oil charts. Further, we'll look at our sectoral snapshot and see which are the trending sectors for the upcoming week. The market was in a correction in a major way last week, and we could see that there are some very good stocks available in very good valuation. So, we'll try to analyze their support and see where we can start making our entry for good accumulation points. Well, friends, if you're new to my channel, please subscribe and hit the like button. You may also post your valuable comments in the comment section. Nifty had corrected in a major way last week. You will see very big red candles throughout the 3 days out of the 4 days in which Nifty was operating. You could see that Nifty has given some bounce back in the last day, and it settled at around 19047 levels. So now this is a crucial zone for the Nifty, and there is huge divergence here from the 21-day moving average. So you can see this zone is quite huge divergence, and we can expect some sort of a pullback rally, and we can expect that Nifty will rally to around 19260. This will be a very good pullback rally for the Nifty. So next week we can expect some sort of a pullback rally in the Nifty daily chart. So moving on to the 15-minute chart, a good strength has been shown by Nifty on Friday. This was the point. This is around 19,055 level in which Nifty has managed to sustain. So the pullback which I was talking about, this 19260 appears to be a very good zone for the Nifty to sustain. So we can expect that Nifty would bounce back and settle somewhere around 19260 levels on Monday. So this would be a very key zone, and beyond this, the Nifty would confirm whether this correction, which it had corrected on last week, was over or not. But sustenance of 19 to 60 is a very crucial level for the Nifty. So what happens if the Nifty doesn't sustain at these levels? Well, the correction will continue from here. It can manage to go and fall further, and again it will try to settle down somewhere around 1860, and this will confirm that this move what we are expecting is nothing but a pullback rally. So this point is a very key hurdle point for the Nifty, and this will determine the future course of Nifty. So the important support points are 18850, 18750, and 18650, which are forming the key support zones. Resistance sides 19,260 forms a very good resistance, and 19,350 also would be a very good resistance. But that is, in fact, if we get some good strength for the Nifty, so 260 would be a decisive role for the Nifty. In the Nifty option chain analysis, well, there is equal number of call writing as well as equal number of put writing, which has taken place on Friday. So 19,250 forms a very crucial resistance zone, and 19,450 also forms a very crucial resistance zone. In the downside, we are having good supports at around 18,850 and 18,650. In the Bank Nifty, the same similar chart pattern is trending in Bank Nifty as well. Good correction candles were visible last week, and we could see on Friday it managed to settle at around 42,782 levels. So we are expecting this gap to be filled in Bank Nifty, so somewhere closer to its 21 DMA. So this resistance of 43,500 forms a very key important resistance for Bank Nifty. So we can easily expect a pullback rally from here, and then we can chart out that if it's a bearish view, the Bank Nifty might fall from here, or if the correction is over, it can rise up from 43,500 levels. Now coming to the option chain analysis of Bank Nifty, the option chain analysis, the call writers has been very active in Bank Nifty. So here we are seeing 43,500 is a very key resistance zone, followed by 44,100. In the put side, we are seeing 42,500 is a key support zone, and 4200 is forming the next key support zone for Bank Nifty. The Indian VIX chart is very interesting. Despite of all the huge corrections what we have seen last week, we could see there is only a minimal rise in the Indian VIX chart. So there is a clear profit taking which is happening in the cards. And we will see the CBOE VIX also. One of your viewer has asked for the analysis of CBOE VIX. In the FII and DI activity, you could see that the DI has been on a continuous selling mode. On Friday, they sold around 1,500 in the cash segment, and last week was a full on selling mode by the FIs. The DI purchases was not reflecting on the heavy selling mode of the FIs, so we could see there's buying from the DIs is still lagging. So that's the major reason for the fall. So looks like this October month we are also going to be ending on a negative purchase from FII sector. Well, in the top gainers and the losers, we could see the major loser was last week was UPL, followed by Adani, HDFC Life Insurance, and JSW, all cracking. All the major listed companies were cracking around 5%. So the top losers was predominantly visible in Nifty. In the top gainers, we could see there was some sort of relief rally which was given on Friday. So Axis Bank was little bit up and HCL was up around 0.8 percentage, but major losers all companies bled in last week's correction. In the Nifty mid cap chart, we could see that the correction has been extended in the mid cap. The mid caps was the major sectors which took the blow, and you could see that the rally which we had begun in April has now managed to breach its 21 DMA. So this is a very vital point. So this was the point which I was waiting for, whether it is going to crack down or really is, if any uptrend is going to resume in the mid cap sector. So but right now it's clear that the correction has started in the mid cap sector. You could see it was never below its 21 DMA from April. So we can expect some pullback rally in the mid cap, and then fall from there would be a very bearish view for the mid cap sectors. So this zone of 39 for 70 forms a very crucial zone right now. So next week you can expect some good pullback in the mid cap and the small cap sectors. Beyond that, the correction will extend in the mid cap and the small cap stocks. The small caps also took a major brand. So this 21 DMA was breached, and you could see it is just hovering below its 21 DMA. So any pullback rally might try to be consolidated in this zone, and breakout or breakdown beyond this point will determine where the small cap indices are heading. But right now I am really bearish in the both mid cap as well as the small cap sector. So moving on to the US charts, well, the downtrend was clearly visible in the US charts as well. There's weakness in the NASDAQ chart. It is forming lower highs, and this confirms a lower lows. So it is moving in this particular channel. So this implies that the correction is extended in the NASDAQ as well. So next week we can see some sort of a relief rally in NASDAQ, where it might rally till 14,400 to 14,500 levels. So a small pullback can be expected in Nasdaq, beyond which it might correct further. For the Dow, the same thing was clearly visible. Even the down is also trending downwards. So this channel is clearly visible in downtrend. This confirms the downtrend for the Dow. In the VIX chart of US charts, you could see there is clear rise in the VIX. This is what I was talking about. The Indian VIX is managed to stay around 10 to 12 zone, but if you see the charts of the US, the CBOE VIX has rise to 20.7 level. So this is rising VIX. We can see that what is happening in the US markets. So a lot of volatility can be expected in the US markets, and I am expecting that some sort of volatility might increase in the Indian markets as well. So looking at the international charts, we can clearly see that the downfall is being extended throughout all the countries. Even if you talk about the UK, it ended in the red zone. For the DAX chart, it is still in a very crucial support zone, beyond which we are expecting some sort of a breakout. and even the Nikkei was corrected by a huge margin. So even the Kospi market also corrected a huge number last week. So the entire global scenario is right now in a negative zone. So profit bookings is in the cards throughout the international charts. So we can expect the same volatility to continue in the upcoming weeks. The rupee chart is still hovering well below 83.4, so it has not really gone anywhere. So, nothing much to discuss in this chart. Unless this point is broken, it forms a very key resistance zone for the Indian rupee. So, we are expecting some sort of action beyond this zone. The gold chart, we are expecting some sort of bullishness to prevail in the gold chart. You could see it settled at around 1992 last week. So we are expecting some sort of a bullish rally in gold. It's a very good V-shaped recovery what the gold has made right now. So generally in line with my expectation, it should move up gradually and show some signs of strength. So bullishness activity is visible in the gold chart. Brent oil has managed to say sideways. No, not much of a big action in the Brent oil. So I can just plot a very good channel in the Brent oil. So I am expecting some sort of volatility in the Brent oil next week. So this zone, any breakout or breakdown from this zone, it will be crucial for the Brent oil. Right now, I am expecting some sort of bullishness in the Brent oil. The Brent oil might resume its journey towards $100 given the tensions in the Middle East. So I am expecting a bullish breakout in the Brent oil. Summarizing the Indian market and the global markets, the Nifty ended in red, the Bank Nifty all in red. You could see all the UK charts, the German charts, the Japanese and the South Korean charts were all in the negative zone. The Nifty mid cap, small caps, every stock was bleeding negatively. The Nasdaq and the Dow also ended in red. The only positive factor was gold and Brent oil. So some strong strength in gold and Brent oil was visible in their charts. Having a look at the sectoral summary, we could see the banks have corrected in a major way. HDFC Bank, Axis, ICI, Kotak, and Federal were all in red. Even the IT sector continued their correction. TCS, Infi, HCL, Tech Mahindra, Wipro, and LTS were all in the red zone. The pharma sector, the correction extended its correction in pharma sector as well. Dr. Reddy, Cipla, Sun, Biocon were all down. FMCG sector, the Godrej Consumer, Dabur, Marico, ITC, and Tata Consumer were all in the negative territory. In the healthcare sector, the Apollo Hospitals and Max Healthcare also took a major brand. In the chemical sector, Tata Chemicals was one of the stock which we were analyzing. We were having a good support at 1,000, but when the entire market fell, even the Tata Chemical stock also took a hit. The travel sector, Indian Hotels, Lemon Tree, these are all the stocks which took a hit. And in the paint sector, Asian Paints, Berger were all ended in the negative zone. The metals also took a beating last week. Tata Steel, JSW, SAIL all ended in negative territory. In the auto sector, we could see some sort of relief rally on Friday. Tata Motors, Bajaj Auto, and Hero Motors are currently right now above their 21 DMA. But given that all the sectors are in red, there is no doubt that even the auto sector can be headed for some sort of correction. In the jewelry sector, you could see some good bounce back which was given by Kalyan Jewelers and Titan, which is still under correction mode. So the first stock I'll discussing is Balrampur Chini Mills. This stock we were expecting the levels of 380 levels to be breached, but you could see despite the correction in the market, good levels were sustained in Balrampur Chini Mills, and the stock has managed to breach its 21 DMA, but it is finding some good accumulation zones around 380 levels. So this zone is a very important zone right now. I am seeing some strength being built up in Balrampur Cherry Mills. So if the stocks inches towards 380 levels, it gives us a very good entry point, beyond which we can expect some sort of strength in Balrampur Chini Mills. Moving on to the second stock, we were discussing about Tata Chemicals. We were waiting for the levels of 1000 as a good accumulation zone, but due to market correction, this stock breached its major support zone, and right now it has settled around somewhere around 955 levels. So this level forms a very vital zone right now for this stock. We can expect relief rally in Tata Chemicals, and it might go to its resistance zone of 1000. Beyond that, the stock has to be assessed whether we can keep on accumulating, or currently we can close our positions in Tata Chemicals. But right now, the levels of 1000 forms a very key zone. In the Thangamile Jewelers, you could see the entire market had corrected, but the jewelry stocks are not witnessing any correction. There is good amount of strength which is being built up in Thangamile Jewelers also. So even the stocks like Kalyan Jewelers was also witnessing good amount of buying despite the major correction in the market. So this, in fact, is showing the strength in the jewelry segment. So we can expect that some sort of bullishness build up in the Tangamail jewelry stock, as well as the Kalyan jewelry stocks. That chart is also very interesting. So for the new stock, I had taken HDFC Bank for study. You could see that there is a very good valuation which is visible in HDFC Bank right now. Currently, the HDFC Bank is trading at around 1469 levels. The PE of the stock is around 16.46, and the 3 years average PE is around 21.55. So it is fairly valued right now. The HDFC Bank is available at a fair valuation, and if you stay, the ROE of this bank is around 17.11, a very good level for the banking sector. And the promoter holding, and there is no promoter pledged in the HDFC Bank. It's a very good, strong, stable bank in the entire private banking sector. There is a consistent increase in the earnings, no doubt about this. HDFC Bank is continuously going despite of the challenges in the Indian economy. And you could see that there is selling pressure in the HDFC Bank post merger. Well, having a look at the HDFC Bank this year, the returns were quite subdued in HDFC Bank. So it formed a very good resistance at around 1700 levels. It could really never breach this level, and we are witnessing further fall in the HDFC Bank. So this chart, you could see that there is continuous selling, which is being visible here. It is forming lower highs on the charts. So major correction was there in last week, and we can expect some sort of a bounce back to 1500 levels, beyond which it would extend its selling pressure. So much more correction is being expected in HDFC Bank, and we can wait for further levels of 1400 to 1300. This zone would be a very good accumulation zone. In fact, I am waiting for 1400 to 1300 for a very good decent accumulation of this HDFC Bank. So that's a wrap for this week analysis. I hope you like this content. Stay tuned for more upcoming videos on a regular basis. Have a happy weekend. Thank you.